In prior videos, you've learned about gross pay, fringe benefits, pre-tax and post-tax deductions, federal withholdings, which we calculated with the IRS publication 15T wage bracket and percentage tables, as well as Social Security, Medicare taxes, state and local taxes. In this video, we are finally putting it all together and computing net pay. Net pay is the amount the employer receives after all deductions are subtracted. It is also known as take-home pay. It is the amount of the check or the direct deposit that you see in your bank account. As a reminder, the deductions on the paycheck fall into three categories. They're mandatory deductions, and federal, state, and local taxes fall into that category. Next are mandated deductions, which are ordered by third parties, such as liens and garnishments. Now, voluntary deductions are something the employee signed up for or did not opt out of at work, like insurance, retirement contributions, for instance, 401k, charitable contributions, and so on. Here's an example of an employee's paycheck generated by ADP, one of the largest payroll processing companies. We can see the name of the employer, XYZ, and the name of the employee, Jane Harper, Social Security, and tax information. The payroll information is for the current period, but also has year-to-date information. There are three major sections: earnings, deductions, and other benefits and information. In the earnings section, we see the regular pay, overtime, holiday pay, and tuition, which looks like tuition reimbursement that the employer provides. In the deductions section, we can see the federal income tax, Social Security tax, Medicare tax, New York State and city taxes, as well as union dues, 401k, stock plan, life insurance, and loan deductions. There's also life insurance adjustment. In the other benefits and information section, we see a payment for group term life insurance, the year-to-date loan amount paid, as well as vacation and sick hours left, and Jane Harper's title, which is operator. In the important notes section, the company communicates changes or announcements. The check on the bottom of the page shows the net amount payable. This can be either an actual check that the employee deposits, or if it is a direct deposit, there would be a note that shows the bank account the amount was deposited into. Some employees also split their net pay into a deposit into their savings account and a deposit into their checking account. Let's work this example step by step. Maya, who receives a salary of $2,000 paid biweekly, has earned $46,000 year to date, is married, filing jointly with one dependent under 17. The checkbox in step 2 is not checked, and the W-4 is from 2020 or later. Maya works for Core Inc. in Charleston, West Virginia, where the state income tax is 6.5%. The pre-tax deductions include medical insurance of $50, a cafeteria plan of $75, and a 401k of 3% of gross salary per pay period. There's a charitable contribution of $10, union dues of $62, and a court-ordered garnishment of $120. Taxable income computation is the same for both federal and state income tax purposes. We start with the gross pay, which we were told is $2,000. Sometimes you have to calculate the period pay because the exercise only provides you with the annual pay. However, in this case, we know it is $2,000. Next, we subtract the pre-tax deductions for 401k, contributions, pre-tax medical, and cafeteria plan to arrive at taxable earnings. It's important to remember that the amount of $1,815 is the federal taxable wage, For purposes of calculating the FICA taxable wage, which is used to calculate Social Security and Medicare taxes, we don't deduct the pre-tax deduction for 401k. That means that the FICA taxable wage is $1,875. We then subtract all mandatory withholdings starting with the federal taxes. By looking up the federal tax wage on $1,815 in the tax table for biweekly payroll for years 2020 and later, and finding the tax for merit filing joint taxpayers who did not check box 2 on the Form W-4. That amount is $70. Maya also has one dependent under 17 and receives $2,000 per year, or prorated $76.92 for biweekly payrolls as a reduction to the tax from the table. The dependent deduction would reduce this tax to a negative amount, which is not allowed. It can only reduce it to 0. Now that we figured out the federal tax, we move on to Social Security and Medicare tax, which we calculate by applying the Social Security tax percentage of 6.2% and the Medicare tax percentage of 1.45% to the FICA taxable wage of $1,875 for Social Security of $116.25 and Medicare tax of $27.19. The Virginia tax rate is 6.5% of $1,815. By the way, we use the same taxable wage for federal and state withholding purposes. So that means that we multiply $1,815 by 6.5%. The total of all tax deductions are $261.42. Next, we deduct the voluntary withholdings for charitable contributions, union dues, and garnishments for a total of $192. And after subtracting from the gross pay of $2,000 the pre-tax deductions of $185, the taxes of $261.42, and the post-tax deductions of $192, we arrive at the net pay of $1,361.58. Let's look at another example. Mackenzie is a full-time employee in Austin, Texas, who earns $4,450 per month and is paid semi-monthly. She's married, filing jointly with one dependent under 17, and has indicated Step 2 checkbox withholdings. She has a qualified health insurance deduction of $50 per pay period and contributes 3% to her 401k, both of which are pre-tax deductions. Her additional withholding amount for Step 2 is $150.75. What is her semi-monthly net pay? Note, use the wage bracket table, and we start with a gross pay calculation by dividing the monthly salary by 2 to get the semi-monthly wage of $2,225. We deduct her pre-tax deductions, which we are told is 3% for the 401k, which is $66.75, and medical insurance for $50. Once we deduct the pre-tax deductions from the gross pay, the result is the taxable earnings of $2,108.25 for federal taxes and $2,175 for the purposes of calculating FICA, because the 401k deduction does not reduce the FICA taxable wage. How do you calculate the federal taxes? You go to Appendix C of your textbook or use the IRS tax table in Publication 15T for semi-monthly payroll. You find the amount of $2,108.25 in that tax table. Why are we looking for $2,108.25? Because that is the taxable earnings amount for federal income tax. In the problem, we were told that Mackenzie is married, filing jointly, so we need to look in those columns in the tax table, and we're told that the checkbox in 2C was checked. That tells us that we need the second column withholding amount, which is $169. But we're not finished yet. Mackenzie also has one dependent under 17 which she's entitled to a reduction on her income of $2,000. We need to divide the $2,000 by 24 to get the amount per paycheck, which is $83.33 for a tax amount of $85.67, plus the additional withholdings of $150.75 for a total of $236.42 for the federal tax withholdings. Very important, the amount that remains after deduction of the dependent deductions cannot be negative. So if the dependent deduction is greater than the tax you looked up in the table, the net amount is reduced to zero. You'll see that in the next example. The next step is to calculate the Social Security tax, which is 6.2%, and the Medicare tax, which is 1.45%. On the FICA taxable wages of $2,175 for a total of $166.38. To calculate the net pay, we take the gross pay of $2,225 and subtract the pre-tax deductions of $116.75 and taxes of $402.81. There are no post-tax deductions, which means that our net pay is $1,705.44. Let's look at this next example using the percentage method. Stark is a full-time exempt employee in Little Rock, Arkansas, where his state income tax rate is 5.9%. He earns $40,250 annually and is paid semi-monthly. He has indicated that he's married filing jointly with two dependents under the age of 17 on his 2024 Form W-4. He has checked the box on step 2 of his W-4 and has $75 additional income tax per pay period. His pre-tax health insurance is $100 per pay period. Stark contributes 5% of his pay to his 401k. Assuming he has no other deductions, what is Stark's net pay for the period? Step 1 is calculating the gross pay by dividing the annual salary by 24 because Stark is paid semi-monthly, which results in $1,677.08. Step 2 is to calculate the taxable wages for federal taxes, which means we subtract all pre-tax deductions for health insurance and 401k. That gives us the taxable wage for federal tax, which is $1,493.23. We also need to calculate the taxable wages for FICA, which means that we only deduct the health insurance in our example from the gross wages, which results in $1,577.08. Now we're ready in step 3 to calculate the federal taxes. We do that by looking up $1,493.23 in the percentage table of married filing jointly, box 2 checked, and the semi-monthly payroll period. The third row includes our taxable wage amount of $1,493.23, and we complete the calculation by subtracting $1,092 from the taxable wage for $401.23, and then multiply that amount by 12% for $48.15, to which we add the tentative amount of $48.40 from the table for a total of $96.55. Next, we calculate the dependent deductions by multiplying the two dependents under 17 times 2,000 and then divided the amount by 24 to obtain the semi-monthly amount, which is $166.67. Now, super important, the net amount after subtracting the dependent deductions from the tax cannot be negative. In our case, it is because $96.55 minus $166.67 is less than zero. So we change any negative amount to zero, but still add any additional tax amount, which in this example is $75. So after all our calculations, the federal tax withholdings is $75. Okay, now that we're ready to calculate the state tax of 5.9% of $1,493.23, which is $88.10. And FICA, which is 7.65% of $1,577.08. The FICA taxable wages for $97.78 for Social Security and $22.87 for Medicare tax. So the final step is to calculate the net pay, which is $1,209.48. I hope you enjoyed this video and it helped you understand the concept of calculating the net pay of an employee's paycheck.